Welcome to the Fit Academy, a free service from Springboard Nonprofit Consumer Credit Management Incorporated. My name is Sherry Stewart. This course is geared towards helping consumers manage their credit responsibly and provides information on how to build a solid foundation for their financial future. We'll talk about how to evaluate credit card offers, apply for credit, and use that credit responsibly. In addition to free financial literacy education, we offer credit and debt management, housing counseling, pre-bankruptcy counseling, and pre-discharge bankruptcy education. Be sure to take the pre-quiz and download a free copy of our seminar materials that accompany this course. When you complete this course, you'll receive a customized document of achievement. If you're already a credit user and feel that your finances have gotten out of control, we have NFCC certified credit counselors available to help you. You'll get free budgeting help and expert advice that is tailored to your specific situation. Our top priority is to encourage financial literacy. Financial literacy is the ability to use knowledge and skills to manage financial resources effectively for a lifetime of financial security and well-being. Unfortunately, the majority of consumers receive little or no formal money management education. Only 12% of high school seniors report having learned anything about personal finance in school. That's why we're dedicated to promoting and providing free financial education to the community. The first thing to be aware of when it comes to borrowing is the cost of using credit. When only paying the minimum payment due every month, most credit cards can be an expensive way to make a purchase. If you were to make only the minimum required payment on your credit card balance, it could take 20 to 30 years to pay off that balance with some cards. Over that time, you will pay much more than the balance owed in fees and interest. The Credit Card Accountability and Responsibility Act of 2009 called for healthy new disclosures, such as a minimum payment warning notice to appear on your monthly credit card statement. This notice is in the upper right-hand corner of your statement. This minimum payment warning could surprise some credit card users, unaware of the possible lengthy time frames and the resulting high interest payments that minimum payments invite. The statement will also show the dollar figure that the cardholder would need to send in each month in order to pay off the balance in 3 years' worth of time. It should be your goal to pay your credit cards off in full each month to avoid any finance costs. Take a look at this chart. As you can see, every year you spend carrying credit card debt will cost you in the long run. The best policy when using credit cards is to pay off the entire outstanding balance at the end of each month. If you can do that, you will pay significantly less interest and your credit rating should be very positive. When you apply for credit, the bank or credit card company will pull your credit report from one of the 3 major credit reporting agencies. They'll also take your FICO score into consideration. In addition to this, credit applications are evaluated based on the 3 C's, which are character, capacity, and capital. Character refers to whether you've used credit responsibly in the past and have a history of paying your debt payments on time. Capacity examines whether your income and living expenses leave you enough money to make future debt payments, and capital refers to what you have to contribute toward the loan. That might be a down payment in the case of a mortgage loan or collateral in the case of a secured loan. Card Act of 2009 introduced many new regulations to the business of credit card lending. Many of the new provisions of the law serve to protect consumers from unfair fees and rate hikes. One downside to the new law is that credit has become more expensive and harder to get. Because creditors can't quickly respond to consumer behavior with higher rates and fees, they will scrutinize you more carefully before granting you credit. The Credit Card Act also made it much more difficult to extend credit to consumers under 21 years of age. If you are in this age group, you may have to have your parents co-sign before you will find a creditor willing to lend to you. Before you apply for a credit card, be aware of the different kinds of credit products available to you. The first distinction is between private label and general label cards. Private label cards can only be used at a single source, like a department store, gas station, or other retailer. Credit experts used to advise that new consumers seeking to establish credit should take out a loan to purchase a major appliance or piece of furniture, then repay that loan responsibly to demonstrate financial responsibility. These days, it's more likely that a furniture or appliance store will offer you a store credit card for a major purchase. The principle is the same. Private label or store credit cards are easier to get, and if you repay them responsibly, they will contribute to a positive credit rating. The second type of card is a general label card. This includes major credit cards from Visa or MasterCard that are issued by banks and credit unions. General label cards can be used in any location that accepts that particular brand of credit card. When it comes to credit and card ownership, there are different types that imply different levels of responsibility. An individual account belongs to one primary cardholder who is responsible for all payments and charges made on that card. With a joint account, two parties are equally responsible for the debts, and both co-owners get credit for the account on their credit reports. If you co-sign for someone else's credit application, you will be considered a joint account owner and you will share full responsibility for repaying the debts incurred on that account. The third type of credit card ownership is an authorized user. Authorized users may make purchases with a card but are not responsible for the resulting debt and do not have to make payments. Their credit report will include an entry listing them as an authorized user, which has less impact on one's credit report than full account ownership. When applying for credit, you have many options. You can visit the website of the credit card you're interested in and initiate a credit application there. If you have an established credit rating, you may receive pre-approved credit offers in the mail. You may be able to get an application form or brochure from your bank or a retail store and mail it in. You will also likely be offered credit at retail stores when you make a purchase. The retailer may be able to grant you instant credit at the time of sale. However you apply for credit, there are laws that require credit grantors to verify your identity. These laws are designed to prevent identity theft, but they may result in delay or a request for more information before your credit application is approved. Before applying for any credit card, you should shop around and compare different offers. By law, creditors must disclose the full cost of their products, so you should be able to get all the information you need to compare credit cards. The seminar booklet that accompanies this course contains a chart to help you compare the different costs and features of the credit cards you are considering. In addition to interest rates, take care to evaluate the different fees a credit card carries. You'll also want to know what circumstances will trigger particular fees. Also be aware that by law, you must opt in before being able to exceed your credit limit and incur an over-limit fee. While creditors will evaluate your financial capacity before extending a credit offer to you, you should do your own self-evaluation to determine how much debt you can handle. Most experts recommend that your monthly consumer debt payments not exceed 15% of your total net income. This doesn't include mortgages or home equity loans, but does include auto and student loans along with credit card debt. The absolute maximum you should be paying toward debt payments every month is 20% of your total net income. If your debt payments are costing you more than this, consider talking to one of our NFCC certified credit counselors right away before your situation gets any worse. Our seminar booklet contains a worksheet to help you calculate your monthly debt payments. If you find yourself struggling with too much credit card debt, take these 9 steps to pay off your balances. Start by tallying up all of your debts and creating a plan to pay off the balances. Avoid making minimum payments and make your payments as soon as possible every month to take advantage of grace periods. If you pay off one card, take the amount you are sending toward that balance every month and apply it to another card, preferably one with the highest interest rate. No matter what, don't skip payments, even if your creditor offers you a minimum payment of $0 or lets you take a month off from making payments. If you have multiple cards with very different balances, you may want to transfer the balance on the high rate card to a card with a lower rate. You may also be able to refinance your card with the highest rate, particularly if your payment history has been solid. Finally, if you have some money set aside, you may want to pay off your high rate balances, especially if the credit balance is costing you more than the interest your savings is earning you. Late fees are a common problem for credit card users. Every late payment typically incurs a $39 fee, which can be larger than your regular monthly payment. Avoid this by using the internet or paying by phone. If you bank with an institution that has online bill pay, they can often make payments quickly to the major credit card companies. While we advise that you always pay more than the minimum if possible, you should pay at least the minimum right away if you are short on cash. You can always make an extra payment later in the month when extra money comes in. If you have a long history of paying your credit card bills on time, you may be able to call your credit card company and ask them to waive a late fee. You won't be able to do this often, but for a one-time late payment, it can't hurt to try. If your financial burdens become overwhelming, you may be tempted to ignore your bills altogether. This is a very expensive and damaging practice. You will incur late fees every month that you miss a payment, and your accounts will continue to accrue interest charges. Your interest rate will probably go up to a higher penalty rate due to missed payments, and eventually all of these charges could cause you to exceed your credit limit, triggering over-limit fees. Eventually, your debt will be charged off and possibly sold to a collection agency. That means dreaded collection calls and demand letters. If your debt is large enough, you could even be sued for the unpaid amount. All of this will damage your credit for many years to come. We urge you to avoid this situation. First, stop making new charges to your credit cards and keep the lines of communication open with your creditors. They may have payment plans that can make paying off your balances easier. Remember, there is always free consumer credit counseling available from nonprofit agencies like Springboard. We can help you create a spending plan to help you get things under control. As a consumer, there are many laws and regulations designed to protect you from unfair lending practices. You can look up these laws to find out how they guarantee your consumer rights. Our free consumer guide to good credit contains more information on these laws. Once you've obtained credit, you should take extra care to keep your credit information safe and secure. Credit card fraud and identity theft are serious and growing problems. Keep your credit cards, passwords, and receipts secure at all times. You should also review your credit card statements every month and make sure there are no fraudulent charges on your accounts. Spotting and reporting these problems quickly will save you a lot of money and hassle in the long run. When we talk about credit scores, we're referring to your FICO score. FICO stands for Fair Isaac Corporation. There are other credit scoring models out there, but FICO offers the most widely used score. The FICO score ranges from 300 to 850 and takes into account your payment history, outstanding debt, length of credit history, types of credit used, and your pursuit of new credit. You can learn more about FICO scoring from www.scoreinfo.org, which is Fair Isaac's educational website. You can get a free copy of each of your 3 credit reports from annualcreditreport.com. You're entitled to 1 free credit report per year from each of the 3 bureaus. This does not include your credit score, and we don't advise purchasing a credit score when you order your annual free credit report. You can stagger your request and order each of your 3 credit reports at 4-month intervals. This can be a good way to detect problems like identity theft or inaccurate credit reporting before they become more serious problems. Be aware that specific creditors might not report data to all 3 credit bureaus, so your credit reports and FICO scores might not be the same across all 3 reports. Consumers who want to improve their credit score should avoid credit repair services and instead work to correct their own credit report. It's not difficult to dispute inaccurate or outdated information on your own credit report, so there is no reason to pay a third party to repair your credit. Ultimately, a history of making debt payments on time and in full is the best way to ensure or reestablish a good credit record. Our free consumer guide to good credit can help you learn how to dispute inaccurate information on your credit report, as well as how to improve and rebuild your own credit over time. For more information about credit scoring and credit reports, our Understanding Your Credit Reports and Scores course goes deeper into those specific subjects. This concludes this course. We invite you to attend our other online courses that are available in the Fit Academy section of our website located at www.credit.org.